Foremost means more. More training, more information, more ways to grow your business. Find out what Foremost can mean for you at foremostagent.com. Click on Foremost Means More.
Beecher Carlson Steve Anderson, a D&O insurance specialist, discusses risks on the horizon for boards of directors with carrier management Susanne Sclafane during the second day of this year's Professional Liability Underwriting Society D&O Symposium in New York.
I think the biggest risk, and it was talked about yesterday as well, is the whole involvement of the government, broadly defined, involvement in investigations of companies and what that does in terms of expense for the company. And some of the situations that were discussed involve nine-figure sums of money in terms of legal expenses, and you have to put on top of that in some of the situations fines and penalties that have been imposed, as well as the ability of the government to have some influence over corporate governance, including mandated private compliance programs and possible changes in the executive suite. So that's the first big issue that people are very concerned about in the boardroom. The other issue is simply the shifting relationship with major investors, and there are positives and challenges to that. The positives are that some of the more activist investors bring tremendous value to the boardroom, and they really understand how to unlock shareholder value among the assets and strategies of the company. The challenge is that it's sometimes viewed as being a bit intrusive to the board, and that the board's responsible for strategy.
Regulatory activism has been a hot topic in the D&O arena for a couple of years. Here, Anderson reviewed some of the D&O insurance solutions being applied to the mounting costs of regulatory investigations.
The first approach has been the possibility of a separate policy form that would involve a separate premium that would provide investigative cost coverage. And that would include not only the expenses but also indemnity amounts, as long as they were not fines and penalties that a company could not purchase insurance for, or for that matter, insure for. The other two approaches are a sublimit of coverage under an existing D&O policy form, which provides a limited amount of value to the company. The other way is to change the definition of claim and other related definitions that would open up the policy form in its entirety to an earlier point in time when a company receives some notification from a governmental authority that it's interested in possibly investigating some of the affairs of the company. None of those issues currently are a perfect fix, and a lot of the discussion has been around the wordsmithing of the policy language, but ultimately there has to be some clearer agreement as to what portion or percentage of those expenses would be covered under the policy, because it can create an odd situation. And I've been involved in claims where a company may have spent $40 million around an investigation from start to finish, and then was involved in a fine or a penalty which would not be covered under the current policy, but also had civil litigation against it brought by its shareholders. And the litigation in the case where the company spent more than $40 million was settled for $28 million. So the response of the D&O insurers is, how can you spend $40 million in effect defending a case and investigating a case that settled for 28? Well, the position of the defense attorneys and some of the policyholders is, fine, we could have spent $10 million and possibly settled for $90 million if we provided a less vigorous investigation and defense of the company. So it really depends upon whose perspective you're looking at, but there needs to be some meeting of the minds in terms of what portion of these expenses will be covered under the D&O policy. I think there will be greater clarity brought to the table. D&O underwriters historically have been very creative, and I do think they will make a range of options available to companies. And then the question will be, for the policyholder, what additional premium are they willing to pay for a higher level of coverage? But resolution of some of the ambiguity in the policy forms is really the first starting point.